Gold is up 3% today, over $124. And yet, the daily chart is a strong sell. The weekly chart is a sell. The monthly is still a buy, but it's hanging by a thread. Right now, we have a 1 hour strong buy smashing into a daily strong sell, and that is exactly the kind of violent disagreement that produces a liquidity trap. There is one danger zone and one hidden opportunity right now. I'll show you both. Stay to the end, because I'm giving you 3 exact levels you can trade tomorrow, including the invalidation that tells you this entire bounce is just a bull trap before the next freefall. Write this number down. 4,265. If we get a 4-hour candle close above 42.65, the daily structure flips from strong sell to neutral, and the bear trend that has erased $1,000 since January is in serious trouble. If we fail there, this 3% rip becomes the ultimate short entry. Right now, current price is 4,238. We are in a session that is fading the weekly sell. The bias is a corrective bounce within a bearish macro structure. Trend is down, momentum is down, but short-term price is challenging the pivot. The herd is positioned heavily short. I'm seeing retail sentiment over 80% short on the 1 hour bounce, and that positioning is the fuel. This rally is not born of strength. It is born of short covering and a news catalyst that I'll decode. But first, the invalidation level. A daily close. Back below 41.83, the pivot, and this bounce is dead on arrival. If we lose 41.83, I expect a retest of the 4,100 support within 48 hours. That is your line between a genuine bottoming attempt and a trapdoor. Let's go to the charts. Weekly time frame first. Gold has been in a brutal sell structure for weeks. The weekly moving averages tell the story. The 200-week moving average is not in play yet. We are trading well above it historically, but the 20-week and 60-week exponential moving averages have crossed bearish, and price is below both. That alone tells you the intermediate trend is controlled by sellers. Look at the weekly MACD. It is deeply negative. Histogram still declining, no bullish divergence in sight. The ADX on the weekly is above 49, an extremely strong trend reading. Strong trends don't reverse on a single daily candle. They retrace, trap, and then continue. That is the baseline we must respect. Drop down to the daily chart. This is where the damage is most visible. Price is trading at 42.38. The daily moving averages are stacked bearish above us. The 5-day moving average is at 42.69. The 10-day is 43.35. The 20-day is 44.28. The 50-day is 45.88. The 100-day is 4,582. And the 200-day is 4,352. We are below every single major daily moving average. The 200-day moving average at 4,352 is acting like a magnetic ceiling far above. Until we reclaim that, every rally is suspect. The daily RSI is at 34. It's been crushed, but here's what most traders miss. The RSI is not yet oversold enough to signal a major low. In previous gold bottoms, RSI dipped below 25 or showed a clear bullish divergence. Right now, we have a 34 handle with price making a new low a few days ago and RSI making a higher low? Check that. The CCI is at minus 119, still negative, confirming bearish pressure. The daily MACD is at minus 108 points. That is an extreme negative value, the kind we see in freefall environments. But the MACD signal line is starting to flatten. That is the first whisper that downside momentum is decelerating. Williams' percent range is at minus 66, still not in extreme territory. The ATR over 14 periods is $122. Gold is moving roughly $120 a day. So today's $124 move is essentially one full ATR. That is significant but not anomalous. It means we are inside a high volatility regime, and any trade must respect wide stops. Now the 4-hour chart. Here the picture starts to shift. We have a neutral to slightly positive structure. Price has cleared the pivot at 41.83 and is holding. The 4-hour MACD has just generated a bullish crossover from deeply negative territory. This is the signal that ignited the intraday buying. The 60-minute chart is a strong buy, moving averages starting to slope up, MACD rising, RSI climbing from 30 to over 50. This is the short-term momentum that is challenging the daily bear trend. The collision of the 1-hour strong buy and the daily strong sell creates a compression zone between 41.83 and 42.65. The break of this range dictates the next $100 move. Here's what most traders miss. Gold is moving tick for tick with real yields collapsing. The bond market today is pricing in a sudden dovish repricing, and that is the hidden driver. At the same time, the headline about Trump saying the US will shortly announce a deal with Iran is a geopolitical wildcard. Normally, a deal reduces Middle East tensions and should be bearish for gold. But the market may be reading it as a sign of broader diplomatic easing that allows central banks to cut rates faster, or it's simply being overwhelmed by a massive short squeeze. Either way, the correlation with real yields is your anchor. If real yields continue to drop tonight, gold can push through 42.65. If yields stabilize, this bounce stalls instantly. Now let's connect the fundamentals. In the last 24 hours, the Iran deal headline has dominated the newswire. But simultaneously, US economic data prints have been coming in soft, and the dollar index is struggling at a critical resistance. That has opened the door for gold shorts to cover. Institutional positioning data shows that hedge funds have been adding to net short positions in gold futures for 4 consecutive weeks. That means the pain trade is higher. When everyone is leaning the same way, the market has a habit of doing the opposite just long enough to cause maximum pain. ETF flows have been negative, but today's surge suggests some late day rebalancing or safe haven bids are emerging. The analyst consensus that gold is down $1,000 since January, is the bull market over? Is exactly the kind of narrative that appears near capitulation lows. I am not calling a bottom yet, but I am saying the risk-reward for aggressive shorts at this exact moment is poor, and the probability of a squeeze up to the 200-day moving average is increasing. My directional lean for the next 1 to 2 weeks. As long as 4,100 holds as support, gold is in a bottoming process that can grind toward 43.50. Below 4,100, the bull market is structurally broken and a drop toward 39.66 becomes the base case. The event that invalidates a bullish lean is a daily close below 4,100. That's the line. Write that down. Do you think gold reclaims 42.65 this week? Comment yes if you believe the breakout is coming, or no if you think the freefall continues. I'm tracking consensus. Most people skip this section. That's exactly where the money is made. Keep watching. I'm about to give you 3 trade setups, each with exact entries, stops, and targets, so you have a plan no matter what the market does tomorrow. Strategy 1, the sniper. This is the conservative play. Wait for the market to prove itself. The trigger is a 4-hour candle close above 42.65 with RSI on the 4-hour above 55. That tells you momentum has shifted. Entry at the first 30-minute pullback to 42.65 after the breakout. Stop loss at 42.28, below today's intraday swing low and below the 15-minute demand zone that formed during the ramp. That gives you about a $37 stop, which is less than a third of daily ATR, plenty of room. Take profit 1 at 43.17, the R2 resistance, for a 1 to 1.4 risk reward. Take profit 2 at 43.99, the R3 level and just above the 200-hour moving average, for a 1 to 3.6 risk reward. Once target 1 hits, move your stop to break even. This setup is void if we get a 4-hour close back below 41.83 before the trigger activates. That would indicate the breakout is failing internally. The sniper, conservative, entry, 42.65 on 30-minute pullback after 4 hours close above 42.65 and RSI, 4H, 55 stop loss, 42.28 take profit 1, 43.17 take profit 2, 43.99 risk, reward, 1 minute and 1.4 seconds, TP1, 1 minute and 3.6 seconds, TP2, invalidation. Void if 4H candle closes below 4,183 before entry. Strategy 2, the active trader. This is for traders comfortable with mean reversion inside the range. The entry condition is a pullback to the pivot level at 41.83, but only if we see a bullish rejection wick on the 1-hour chart. That means price dips to 41.83, then aggressively recovers back above 4,200 within the same candle close. Entry on the close above 4,200. Stop loss at 41.63, just below the pivot and below the Asian session volume weighted average price. Take profit 1 at 4,265, resistance, for a 1 to 1.3 risk reward. Take profit 2 at 4,317 with a trailing stop rule. Once 42.65 is hit, move the stop to 4,230 to lock in a profit and let the rest run. This trade bets that the pivot holds as support and that the range low is defended. The invalidation. If price breaks below 4,183 and stays there for more than 1 hour, the setup is dead. This is a standard mean reversion play in a high ATR environment, so position size accordingly. The active trader, standard, entry, 4,200 on 1H close above after bullish rejection at 41.83 stop loss, 41.63 take profit 1, 42.65 take profit 2, 4,317, trail stop to 4,230 after TP1 hit. Risk, air reward, 1 minute and 1.8 seconds, TP1, 1 minute and 3.2 seconds, TP2, invalidation. Void if price stays below 41.83 for a 1 hour. Type your gold range for tomorrow in the comments right now. I'm reading them. Let's see who's aligned with the pivot zone. Strategy 3, the aggressor. This is the high-risk counter-trend play for those who believe the daily strong sell reasserts control immediately. The plan is to short a rejection at 42.65. Trigger. Price spikes into 42.65 on the 15-minute chart and forms a bearish engulfing or shooting star candle. Entry on the break of that candle's low, around 42.58. Stop loss at 42.75, just above the spike high. That's a tight $17 stop, less than 15% of ATR, aggressive. Take profit 1 at 41.83, the pivot, for a 1 to 4.4 risk reward. Take profit 2 at 4,100, the major support, for a 1 to 9.3 risk reward. This trade exploits the fact that the daily trend is still firmly bearish, and the first touch of 4,265 often invites heavy selling. Warning. This is only for traders who can lose small and manage risk aggressively. The tape can squeeze you out in seconds. If you hesitate on the stop, don't take this trade. The aggressor, high risk, entry, 4,258 on break of 15 minutes bearish rejection candle low at 42.65 stop loss, 42.75 take profit 1, 41.83 take profit 2, 4,100 risk, reward. 1 minute and 4.4 seconds, TP1, 1 minute and 9.3 seconds, TP2. Invalidation. Void if 15-minute close above 4,275. Reduces probability if 4H RSI a 60 risk management pulse. Never risk more than 1 to 2% per trade. No positions through high-impact news like FOMC or CPI. Stops are non-negotiable. With gold swinging $120 a day, position sizing is everything. This is how you survive to trade the next big move. To wrap up, the single most critical level for the next session is 4,265. A 4-hour close above it changes the narrative from dead cat bounce to potential trend reversal, and it opens the door to 43.50. A rejection there, combined with a move back below 41.83, signals the freefall is intact and 4100 is next. Tomorrow's wildcard is the Iran deal announcement and the US dollar reaction. If the dollar spikes on geopolitical easing, gold gets hammered. If the dollar drops on dovish rate expectations, gold rips higher. I'll be covering Bitcoin and the S&P 500 divergence in the next video, because the risk asset shadow is casting a long tail over everything right now. Tap the end screen to go there. Smash like if this gave you a clear plan. Subscribe, hit the bell, and I'll see you in the next one.